Jonathan Sakraida is with us right now, equity research analyst at CFRA. Tell me a little bit about your thoughts on 3M. Did you expect to hear some of the shortfalls that you did hear?
I'd say a lot of the shortfalls were expected. Back in 2023, there was commentary from management that we were going to see a bit more of a sluggish growth environment in 2024. So this downside of over 10% in shares movement today is, in our view, a little overzealous there. So the slower growth environment, not surprising. Manufacturing sector has been contracting for some time, and obviously an industrial conglomerate like 3M is exposed to that weakness. So really the fourth quarter was quite positive in isolation, beat on top line results and beat on earnings expectations. But unsurprisingly, the story here for investors is what's going to happen in 2024. And I think that there was some optimism around interest rate cuts, probably some hopes that we're going to see a bit more of an upbeat outlook from 3M. Given that those circumstances, but 3 rate cuts might not be enough to move the needle for the macro pressures currently weighing down the company.
Do you think the company is just being conservative with this sort of weaker outlook? They had a good fourth quarter, to your point, right? They actually beat, they had quarterly profit that beat the forecast. The full year outlook was weaker than expected, to your point. Concerns about manufacturing, in the world, this is an industrial type company. Do you think they're just being conservative? Because I know you raised your price target, right? You raised your price target to 110. It's at 94 today and change. Is there some opportunity here?
Exactly. So we raised our price target today, even though the guidance of $9.35 to $9.75 for EPS was below consensus. We had a bit more of a cautious outlook for 2024, given some of the macro headwinds we're seeing broadly in the industrial sector. So the guidance is actually a bit higher than our own estimate. So we raised slightly off of that. But you're exactly right. 3M does have a history of being more conservative on guidance, so we think that is a part of it. And given just how many moving parts there are, not only in a macro sense, but also with the litigation settlements coming up and the spinoff of Solventum, their healthcare segment, I think they're probably even more likely to be on the conservative side looking to this coming year.
I think also it has such a variety under the umbrella, right? I mean, it has several segments. I mean, do you think of 3M as a, industrial or a manufacturer or, things that we use in our household even, right?
Right. They're exposed to a lot of different moving forces here. We can kind of see that play through in the recent results. As far as consumer discretionary spending, they're exposed to that, so directly exposed to the consumer. A lot of industrial type businesses are very B2B, but 3M's a bit more unique given that they have exposure directly to that consumer discretionary type spending, as well as to industrial spending themselves, capital spending. Now, on that note, one thing that we're cautious on is that channel destocking, right? So higher interest rates have begun impacting a lot of industrial businesses due to higher carrying costs. Higher interest rates mean higher costs of inventory, and as long as that's flowing through to customers, they're going to be a little more cautious on order rates. So we're seeing that in declining demand. We saw, even if you look at manufacturing PMIs, the same story, even beyond just 3M, is that order rates are coming down on this trend towards channel destocking because of higher rates. So I think looking to later this year, interest rates could be that wild card. If we do see more aggressive cuts, this could be a positive catalyst.
Let me ask you, I mean, you have a hold rating on this name. There's no company that's like 3M because of the different segments that we just discussed. But do you have some buy ratings or strong buy ratings on the mind that may be similar to this in any way, shape, or form?
Sure. So there are a few manufacturers we're more positive on, given their deeper exposure to secular trends, less cyclical headwinds that they have to digest and deal with. So one area we're seeing a lot of consistent demand is for aerospace equipment and components. So currently we have a buy recommendation of Parker Hannifin because of that large exposure to the aerospace market. And we're going to expect to continue to see very strong demand for these type of products, given the ramp up in aviation production on a return of flight activity globally. So this is one area within industrial manufacturers that we are quite positive on, but it really has to do with how much they're exposed to it. If they have a limited exposure like 3M, then it's going to be kind of clouded by more cyclical headwinds.
Yeah. So I have Parker Hannifin. Is that's a name that you have as a buy overall when you think about the aerospace group? I mean, do you have themes for 2024? Do you think we're going to be in this higher for longer? I mean, how are your strategists working it out for 2024? Big picture thought?
Sure. So currently within industrial sector, we're underweighting it actually. We think that a lot of sales and earnings expansion this year has been brought on by pricing adjustments. We even saw that help to buoy 3M to some degree this year. So in 2024, we think that results are going to be, the contributions from pricing are going to be a bit more limited. So they're going to be a little more exposed to, or more dependent rather, on volumes expansion versus just having pricing kind of cover up or balance against that. Additionally, the interest rates, we're expecting those cuts to come later in the year. So the pain points in manufacturing sector could continue. We're already at 14 consecutive months of contraction in the manufacturing PMIs. That's quite significant. I mean, that's longer than the stretch of time consecutively for the Great Recession. I mean, obviously not as deep of a contraction, but we've seen a very prolonged slump, and we think that can continue at least into the first quarter of this year.
Jonathan Sakraida, thank you so much of CFRA. Really appreciate this look at 3M and some of the other names. Thank you.